Welcome to this comprehensive video guide on whether to rent or sell your home, especially when facing a job relocation. In this video, we will explore key financial and personal factors that should influence your decision. Here is the agenda for today's video. We will begin by exploring the scenario at hand. Then, we'll dive into the key factors to consider when making this decision. Next, we'll look into some important considerations and personalized recommendations. Lastly, we'll wrap up with key takeaways for your decisions. Imagine you have a primary residence, and you're now facing a temporary job relocation. This brings up an important decision regarding your home. Do you rent it out or opt to sell it? Let's examine the scenario closely so you can make an informed choice. First, you need to consider the mortgage. An existing low interest rate is a valuable asset. Next, assess your equity, which is the difference between your home's market value and outstanding mortgage. Then consider the potential rental income each month. You'll also need to calculate the incurred expenses, which include mortgage payments known as PITI, property management fees, potential vacancies, and maintenance costs. Based on these, evaluate your cash flow, whether it's a net income or loss after expenses. Consider the potential capital gains tax you may face if you decide to sell the property. Key considerations include the actual value of maintaining a low-interest mortgage in a challenging economic environment. Conduct a detailed cash flow analysis. Positive cash flow can translate to passive income. Understand your capital gains tax implications, as exclusions on substantial gains depend on specific criteria. Evaluate property appreciation potential in your area, focusing on long-term gains. Be prepared for landlord responsibilities like tenant issues, property maintenance, and potential vacancies. Finally, assess your personal preferences, especially your risk tolerance and time you're willing to commit to. Here's a quick quiz to test your understanding so far. What is the primary asset to retain when considering renting over selling? Is it the rental income, low-interest mortgage, equity, or capital gains tax benefits? You may pause the video now to think about the answer, and then we'll discuss the answer in the next section. The correct answer is the low-interest mortgage. It's a valuable asset, especially in a rising interest rate environment. To summarize, evaluate your cash flow situation and potential property appreciation. Always weigh the tax implications of selling versus renting. Understand your comfort level with landlord tasks like maintenance and dealing with tenants. Acknowledge the value of having a low-interest mortgage. Finally, seek advice from professionals like a real estate agent, property manager, and tax advisor to make a well-informed decision. That's all for this guide. We hope it helps you make the best decision regarding your housing situation. Don't forget to like, share, subscribe, and leave your thoughts in the comments below.